We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.
With news that a brand new tax on unrealized capital gains is coming into play, we have to ask the all-important question: is this a tax on hope? Will it just impact the super wealthy? Or is it going to be, like income tax before it, something that eventually hits us all? Well, to delve deep into this can of worms, we're joined by economist and author, Mr. Andrew Moran. Welcome aboard, Andrew.
Thank you for having me.
So tell me, this unrealized capital gains, am I right in thinking that this is money that you've not yet earned?
Yeah, so let's say I buy shares in Tesla or Apple. Let's say I did 5 years ago, and I accumulated all this capital from it, but I never hit the sell button. But it's still not money I've yet to earn. So it's exactly what it says, unrealized. Once I hit the sell button, then I get all that profit. Then that money actually goes into my account. It's actually liquid. It's money I can utilize. Realized gains, and then of course unrealized losses, as if the stock is going down, it's in the red, but I've yet to hit the sell button. So so realized, unrealized. Unrealized is money you haven't yet made. Realized is money that you have made.
All right. So how does this work in practice? What happens if you have a stock that you buy for, let's say, $10, and it shoots up to $100? You're then liable for tax on that $90 profit, right? Under this scheme. But then what happens if it drops down to $1? If you've already paid the tax on that, is the government going to hunt you down and give you a refund?
I highly doubt that. Although there has been some discussion about using it as a tax deduction on the end of the year. But yeah, it's exactly as you say. So if I buy, let's say, I don't know, Suncorp at $25 on January 1st, and it shoots up to $60 on December 31st, then I have to pay $35 a share in taxes. But then the other kicker is that, fine, you have this unrealized gains tax, but then when you sell that tax, you hopefully make a profit, you pay tax on that as well. It's completely absurd. It's your double tax on your stock holdings. It's completely unfair. And I know it's supposed to only go after the billionaires, but it's eventually going to seep into other classes as well.
Yeah, so let's talk about impact. I mean, who's this going to affect? At the moment, it's being billed that this is a tax on the super wealthy. That's the billing, right? That's the sales pitch. Now, as you and I both know, and everybody really knows, income tax, which was initially meant to be a temporary measure, initially only affected very few people, very, very few. But now, over a period of time, and it's not that long a time, what is it, 107 years since income tax was first brought in the United States? Now it's just about
Nancy Pelosi's age, I think, right?
Yeah. So now that's just about everybody pays some form of income tax. Is the same thing going to happen here?
Yeah, you're exactly right. It was more than a century ago. They had that income tax. It was you had two tax rates, 1% and 6%. It was only supposed to impact 3%. Fast forward to the present, everyone, if you're in any sort of income, you get taxed on it. So yeah. So when it comes to this unrealized gains, yeah, the first target is the super wealthy, the billionaires. But my prognostication is that it's not going to generate nearly as much revenue as the federal government hoped. And the billionaires are going to use the loopholes, which they should, and they're going to use their accountants, which they should, and they're going to flee elsewhere. And then the government's going to say, okay, you know what? Let's lower the burden to, let's say, 50 to 100 million incomes with 50 and $100 million dollars. And then that's not going to generate enough wealth. And they're going to keep lowering and lowering and lowering it until the Robin Hooders, the men in digital tights, they're going to be taxed to the oblivion too. And then you also have the other issue too, is that, is this going to impact crypto holders as well? Is it going to impact cryptocurrency investors? Is that going to pop a bubble? Is that going to lead to a sell-off? So there's so many uncertainties, and most of them are negative. But also, I'll add one more thing here, is that there's a great quote from legendary economist Milton Friedman, and he said, "There's nothing more permanent than a temporary government program." And this is exactly it.
That is one of the classic sayings. So it's not just about stocks though, right? So people who are listening who think, well, my stock portfolio, that's kind of protected by my 401k or whatever. It's not just about stocks. It's about property, right? It's essentially everything that can be realized as a capital. So if it's something that you could sell in future and gain a profit on, it would cover that. So that's houses, art, even businesses to some extent, right?
Yeah. So if I buy my Van Gogh painting for $100 million, and it goes up in value, then then yeah, that's going to be taxed. But the issue with that is that it's fine. It's easy to assess the value of a stock. You just go in your brokerage account and say, okay, fine, the stock is up 25%. But if I'm using, let's say, artwork, I'm using a Munch or a Modigliani, you have to utilize a wide variety of assessments to determine its actual value. So the government's just going to come up with its own imaginary figure, its own definition, and then say, okay, fine, this Van Gogh, you got to pay, $30 million on it, and then once you sell it, you're going to give us another $25 million on it. So it's all subjective. The government's going to max out as best as they can on that deal.
Let's delve into that just a little bit more, Andrew. So let's say, for example, somebody has their wealth tied up in various assets. So maybe they're cash poor. Let's say, for example, they've got, let's say you get left a Van Gogh, lucky you. Now, you've got that painting. Now, that painting appreciates in price over time, but you're just a regular wage earner, but you happen to have an asset here. Now, does this mean that you could be liable for, let's say, for example, 30 million in taxes when maybe you earn $150,000 a year? And so therefore, you're going to be obliged to sell that piece of art at possibly a very bad time in the market, just to pay the taxes on something that you haven't earned any income on anyway.
Yeah, that's an excellent point. This is the problem with this proposal. It's not delving into any specifics as of yet. But what I assume what would happen is that when it comes to, let's say, the artwork or the unrealized tax gains, they'll probably look at your income tax return at the end of the year and say, fine, if you're over, if you're making $1 billion a year, then you're the one going to be taxed. But if your annual income is at $30,000 a year, then you're not going to pay, you're not going to pay much tax on this Van Gogh, as the Dutch would like to say. So I think as time goes by, the Biden administration is going to release more details, but for now it's best to count hold on to your nuts like a squirrel in the wintertime.
Well, you'll probably be taxed on those nuts as well. So what I really want to ask about here, final question pretty much, is how will this impact investment? So obviously anything that impacts potential earnings in the future scares investors. They have their investment funds. They want to realize a return on it. But that's the advantage of only paying capital gains once you make the capital gain, which obviously gives it its name. But if you're going to be paying it on speculative numbers, because you don't know for sure when you can price out of a market, is this going to scare investors away from American markets, not just in stocks, but in entrepreneurial schemes, businesses, things like this?
Yes, this is one of the downfalls of this legislation. I don't know if you've ever seen The Wolf of Wall Street and that scene between Matthew McConaughey and Leonardo DiCaprio, and Matthew McConaughey says the financial market doesn't exist. It's imaginary. It's fairy dust. So I think that's exactly how the Biden administration views the financial markets. It's not really real. But this is complete poppycock because the financial markets are critical to economic growth. So if you have this unrealized gains tax on U.S. investors, they're just going to take their capital and go to China. They'll go to Europe. They'll go to Australia. They'll go to New Zealand. They're going to take all their capital. You're going to have a huge exodus. You're going to have massive capital outflows, and that's going to benefit other foreign markets. So it seems like Biden wants to make the world great again, as opposed to making America great again, because all this capital is going to flee. Another important point is that when you own a share, you're owning a share of the company. The company sells those shares to generate enough money to, let's say, expand their company, hire more workers. They want to develop a product. When you're taking that money out of the financial markets and giving it to Joe Biden's pockets, that's going to hurt the long-term growth of all these businesses. Now, Tesla, they'd be fine. Apple, they'd be okay. It's these medium cap stocks that debut that have their IPO that are going to be hammered on these. They're not going to generate enough money because if let's say 30% of investors take their capital and go to India, that's 30% less for American companies. So this kind of long-term consequences. I hope that the administration or the U.S. government's going to say, okay, this is a bad idea. It just shows how their desperation of how they need to come up with any imaginary scheme to take money that you haven't even earned yet to cover this massive $2, $3, $5 trillion spending programs by the Democrats and President Biden.
As Sonny Corleone once said, perhaps it's time to hit the mattresses. Andrew Moran, thank you ever so much.
Thank you, sir.
Right after this short break, we'll be talking Liberty with Scott Decasenter, asking why so many college applicants see it as detrimental to be white and how the government has encouraged perverse incentives to lie. Don't go anywhere. We'll be right back with Liberty Nation Radio here on the Radio America Network. We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides. Who are we? We are Americans that believe in liberty. We are a project of the nonprofit One Generation Away. We are patriots who apply the founding principles to the issues of today.
And they keep moving the goalposts on us.
We are educators and commentators who love America and the Constitution. Who are we? We are Liberty Nation.